The stock markets have been going crazy in the last 10 years. The SP 500 index has moved from just 1090 in January 2010 to more than 3300 in January 2020. And that's just staggeringly amazing, because essentially what this means is everyone who bought in the SP index 10 years ago has tripled their capital without doing anything. You, sitting there right now, could have been a millionaire. That's of course if you had invested $333,333 in January 2010. Or you could be buying your very own Lamborghini Huracan right now if you had invested $60,000 back then. I'm of course kidding. Don't do that. Luxury cars are a big fat liability, and we never, ever recommend you to buy such liabilities. And I have some sad news, because unfortunately, my friends, the party may be coming to an end. Hello, Apex entrepreneurs. In this video, we're going to give you 3 reasons why a crash in the stock market in the next 3 years is very probable. But before you start to panic, don't forget to subscribe to our channel. We'll be publishing a video every Wednesday to teach you how to build a business from scratch and how to invest wisely and master your personal finance. And of course, don't forget to hit that notification bell after you subscribe. So let's go back to the crash and why we think it's coming soon. We'll start with reason number 1, which is the coronavirus. Now, unless you've been living in a cave for the past few months, you've definitely heard about this devastating virus that is threatening the whole world. This virus has so far caused the death of thousands of people, and if it continues at the same rate, it could signal a huge disaster for all of us. But wait, what? I know what you're thinking. Coronavirus? Why the heck would the coronavirus cause a crash in the stock market? Well, I'm going to tell you why. Essentially, China is a major player in the worldwide economy, and it's the second largest oil consumer in the world after the United States. So, because of the coronavirus, the Chinese government took protective measures and forced companies to shut down, which in turn caused a decline of 20% in the demand for oil. And if the demand goes lower and the supply stays steady, guess what, my friends? The price of oil will fall. Easy. That's economics 101. So let's have a look at the price of Brent crude oil in the last month. It's gone down 13%. Since the price of oil decreased, we're definitely going to witness a decrease in profits of oil and gas companies. And if this trend continues, we'll definitely see the share price of the whole oil and gas industry shrink. This same logic applies to copper. China is also one of the biggest copper consumers in the world. And again, since demand decreased, the copper price also decreased. And if the coronavirus continues at the same rate, copper mining companies will definitely suffer. It's really important to understand that China accounts for 19% of the world's GDP and is deeply integrated in the global supply chain. Almost every single global company has factories in China. Let's look at an example from the tech sector. Much of the world's consumer technology is either made in China or relies on parts made there. China is the world's largest manufacturer of mobile phones, computers, and televisions. It exports billions of dollars of goods every year. If the virus continues to spread, the global tech supply chain could take a serious hit, leading to product delays and shortages. And this will definitely affect the profits and the share price of tech companies. So in summary, the coronavirus is spreading quickly and might cause huge damage to the stock market. That's why you should share this video with your friends to warn them. They might be holding stocks in companies that might get seriously damaged by the virus. So share this video with your friends and hit that like button if you're enjoying it so far. Now, let's move on to the second reason we might see a crash, which is buybacks. Corporate buybacks have been the primary driver of the US stock market. Now, for those who are not familiar with what a buyback is, it's basically when a company buys its own shares, and this drives the price up. Since 2009, US corporations have been the biggest buyers of their own stocks, and when you buy stocks in large amounts, the price will go up. there's no magic to this. Again, it's Economics 101. This is happening for two main reasons. The first is the low interest rate policy of the Federal Reserve. This has allowed companies to borrow money with low interest rates. So they borrowed money and invested in the stock market to make higher returns. Secondly, because of the tax cuts by President Donald Trump's administration. This allowed companies to pay less taxes. So they're left with more money to invest, and they invested in the stock market. But this isn't really healthy for the economy. Because if a company is left with more money, the best thing for the company to do would be to invest the money in the business and create more jobs. But of course, these companies choose the easiest way to make money. And instead of expanding their business, they bought their own stocks. But the party may be coming to an end. Since July 2019, the buybacks are falling. This may be because the management of big companies think that the stock market is overvalued now, and it's better to invest the money elsewhere. You should also know that the low interest rate Fed policy cannot last forever, because if it's too easy to borrow money, people will just keep borrowing money and this will increase inflation. If the Fed raised the interest rate, it would be more difficult for corporations to borrow money and buy back their stocks, which could also lead to a huge decline in the share price. Now in this video we're talking about a possible crash, which could be very harmful to a lot of people. So in order to help you generate income, even in the midst of a recession, we invite you, once you finish this video, to go to the description, where you'll find many resources to help you make money working from home. You'll find the books that we recommend to help you acquire the right mindset for success, a free video course that will teach you how to generate passive income, and how to create a six-figure online business, and much more. Of course, all the methods we teach or recommend are not get-rich-quick methods. There is a lot of work to be done up front before enjoying the money falling into your bank account. So don't hesitate to take a quick look at our description and enjoy learning. Now, getting back to the topic at hand. The third reason why we might see a big crash in the next 3 years is that the earnings of big corporations are falling. And when the earnings are falling, the share price will most likely follow. If you do a little research on the SP 500 earnings, you'd see quickly that the earnings have been falling for the last 4 quarters. But the SP 500 index is still near all-time highs, which indicates that this index is overvalued. You should note that when companies buy back their own shares, the number of shares outstanding decreases, and this will result in a higher earnings per share. This is because earnings per share is given by the total earnings divided by the number of shares outstanding. So when the denominator decreases, the earnings per share increase, and this will mask the overall decrease in profits. By the way, if you want to learn more on how to value a stock and when to buy or sell a stock, we have prepared some interesting videos for you on this topic. All you have to do is click here to watch them. So, to sum up this video, if coronavirus continues to spread at this current rate, and if the earnings and buybacks of the SP 500 keep going down, a crash could happen very soon. This isn't rocket science. But also keep in mind that 2020 is an election year, and President Trump will most likely do whatever it takes to prevent a crash, because this will of course help him get re-elected. So we might expect to see the crash to be delayed until after the election, and to happen in the next few years. But if you're already subscribed to the channel, you don't need to worry, because we're going to teach you what to do and how to deal with a recession and make even more money. If you'd like to know more about the US stock market, we recommend you follow Ayush Singh, a famous blogger that can help explain to you what is happening in a simple and easy way. We were actually inspired to talk about this topic in this video from one of his articles. We'll leave a link in the description so you can go and take a look. That's it for this video. If you enjoyed it, don't forget to share with your friends, hit that like button and help us with the YouTube algorithm. Also, don't forget to subscribe and hit that notification bell for more videos like this one. If you're still here enjoying this running music, here are 2 more videos we think you'll love watching. All you have to do is click on either one of them on the screen right here.